Hi everyone, welcome to the SBS World News newsroom. We are standing by for the Reserve Bank Board's interest rate decision. The board is widely expected to leave official interest rates on hold at 0.25%. What will be interesting and what normally happens after the Reserve Bank makes this decision is that it releases a statement as to why it made that decision on interest rates, and more importantly, a bit of an analysis on the state of the economy, which is what we'll be taking a closer look at in a few moments. Soon, I'll be joined by the Chief Economist of IFM Investors, Alex Joyner. He'll have a few minutes to take a look at that statement and discuss the important points. But as we know, official interest rates are quite low, in fact at record lows, down to about 0.25%. That cut was made in an emergency meeting back on the 19th of March. So we'll take a closer look at what the RBA has done in just a few seconds' time. The Australian dollar currently trading at 69.6 US cents. The Australian share market up by 0.6 at the moment. So we're just waiting for that decision to come through from the Reserve Bank. Obviously, it's also injecting money into the economy by purchasing government bonds. In the previous announcement, it also said that it is continuing to take a closer look at the Australian economy, although it said that the Australian economy is going through its biggest economic contraction since the 1930s, obviously because of the coronavirus. Now that decision has come through, and the Australian Reserve Bank has kept official interest rates on hold at 0.25%. Now, if you bear with me, I'll go through some of the details in the statement. It's actually quite long. It's a lot longer than the previous statements over the past few months. The RBA is saying that it's maintained the current policy settings, including the targets for the cash rate and the yield on the 3-year Australian government bonds of 25 basis points, saying that the global economy has experienced a severe downturn. As we know, most people have lost their jobs. The outlook remains uncertain, and the recovery is expected to be bumpy and depend obviously on the containment of the coronavirus. Internationally, it says infection rates have declined in many countries, but still very high and rising in many others. I'm just trying to find what it is saying about the Australian environment. Again, exactly the same statement as the previous month. The Australian economy is going through a very difficult period and is experiencing the biggest contraction since the 1930s. It also notes that since March, an unprecedented 800,000 people have lost their jobs, with many others retaining their jobs only because of government and other support programs. Also, what else is it saying here? There has also been a pickup in retail spending. As we know, those latest retail sales numbers for the previous month are a record increase. Whether or not it can be maintained is still yet to be seen. The RBA also saying, notwithstanding the signs of a gradual improvement, the nature and speed of the economic recovery remains highly uncertain. Uncertainty about the health situation and the future strength of the economy is making households and businesses cautious, as we would expect. And the pandemic is also prompting many firms to reconsider their business models, and some businesses rehire workers as demand returns. Others are restructuring their operations. And the final paragraph is always one of the most interesting areas. The board's committed to do what it can to support jobs, incomes, as we know. The accommodative approach will be maintained as long as it is required, and the board will not increase the cash rate until progress is being made towards full employment and is confident that inflation will be sustainably between that 2 and 3% target band. So that's the guts of the RBA statement. Let's join now Alex Joyner. He is standing by and ready to go live with me. Alex, thank you for standing by. You've only had a couple of minutes to take a look at that statement. What stood out to you?
Well, as expected, the RBA left its policy rate on hold. That wasn't really the standout. That was pretty obvious to markets and economists going into this. But what stood out was, the Reserve Bank putting forward a bit of a positive narrative on the economy, arguing that things have stabilised. Retail sales are picking up. It mentions things like that. So it's putting a little bit of a positive spin on what is a very challenging economic time. The other thing is it continues to emphasise the cooperation between monetary and fiscal policies, and it sort of left that second to last paragraph unchanged, where it says monetary and fiscal policy will be there for a while and will be required for some time, as the Reserve Bank puts it. And what we're really getting from that statement from the Reserve Bank is that it's got its policy settings in place. And it expects the government to have its policy settings in place too. So the Reserve Bank sort of playing this wait and see game that perhaps all economists are, looking to see what the government will do next. And where we're going to get most insight from that is July 23rd, when the Treasury will release its economic and fiscal outlook. We'll get a bit of an inkling as to how the government will approach the coming exit from the crisis, and just how it will add support to the economy as we do that. Most important around that is labour market support, JobKeeper, Job Seeker. These things are going to be pretty important for the Reserve Bank, because if it feels that the government falls short on adding further fiscal support, then the pressure will be on it to add more monetary support. And it's really, at the moment, got little appetite to do that.
Alex, a whole big paragraph on the jobs market, right? Saying an unprecedented 800,000 people have lost their jobs. There isn't any real direct, feeling of what the coronavirus is doing to the economy. You don't really see that word in the statement at all. What do you think the RBA is feeling about coronavirus? And do you think that things are really fluid, especially with what we're seeing out of Victoria at the moment?
Yeah, I think it's the Reserve Bank's been, pleasantly surprised that things haven't deteriorated to an extent that it thought may have, particularly on hours worked in the labour market. It was looking for a 20% decline in the number of hours worked. It's probably got a 10% decline, and things are starting to stabilise according to some of the payrolls data and the labour market data we're seeing. So, it's looking at this situation where the outlook isn't as bad as the Reserve Bank had expected, but the caveat it has to that is, and all economists have this, is the future is highly uncertain, more so than normal. And we're seeing that both domestically and globally. The outbreak or resurgence of cases in Victoria has created some uncertainty for the Victorian economy specifically. But you also look to the US. We're looking to the US as being one of the drivers globally of the economic recovery, and we're seeing cases sort of continue to accelerate in the US economy, and there could be further risks, downside risks to that economy. So, the Reserve Bank is again, like I said, putting forward this glass half full narrative, but it's highly uncertain around just which way things will go.
What about any indication of where future rates are going? And there was this discussion outside of the Reserve Bank anyway about the need for negative interest rates down the track. What's your take? Yeah,
well, so the indication of further rates, the RBA's been pretty plain around what it's doing. It's giving pretty strong forward guidance, and that's remained in place. That last paragraph has been unchanged. They haven't sort of tinkered with that at all, the language and the outlook there that we look for. So accommodative monetary policy settings from the Reserve Bank will be in place for as long as required. And it's put some economic parameters around that to say that it's looking for progress towards full employment, and it needs to be confident that inflation is going back towards its target band. And most economists take from that it's going to be quite some time. It'll take a long period of time for the labour market to repair, and we sort of got an idea of what the Reserve Bank's thinking from the Deputy Governor last week, Guy Debelle, who said it will be some years before the cash rate moves upwards. And, you can't disagree with that. It's going to be a late 2022, 2023 story before we even start to think about raising interest rates in Australia.
Okay, so for anyone that's joined us late, the Reserve Bank has left official interest rates on hold at 0.25% as expected. Alex, before you go, just on some other issues, I think we're getting some press conferences or media conferences now about what's happening in Victoria and a reported resurgence in coronavirus cases there. This potential second wave coming out of Victoria, does it change your view as to how Australia will recover from this coronavirus pandemic?
It certainly creates downside risks. The Victorian economy is around about 23% of the Australian economy. And, if there's going to be further lockdowns that are more broad, I think what's been spoken of is, we're seeing the postcode lockdowns, but whether that broadens out to Melbourne and the Melbourne CBD, that would be material. And that would be a setback to small businesses and the broader economy. And what we might observe if there were these further restrictions put in place for, I think it's been touted, 4 to 6 weeks, then you would start to see some of the economic indicators across states diverge a little bit more than they have to date. Most notably the labour market, but also you would appear things would appear in the retail sales data and probably confidence indicators as well. So that would be a negative for the Victorian economy.
And just final question, and it's a bit of a side issue today. We saw some talk from some private groups, or one in particular anyway, about a potential increase to the GST to 12.5% and the benefits of that to the economy. What do you make of it?
Well, from the outset, you would say that this is a politically difficult issue and is not on the table in terms of being something that I think the federal government, at least, is going to explore in any detail going forward, even though economists would probably like to see that. This is why we continually see the GST being brought up as an issue, is because in Australia we actually have a pretty poor performing GST. It's one of the worst in terms of the revenue generation as a proportion to GDP of any advanced economy. So there is this scope for increasing the GST or broadening its scale, as long as we get the income tax cuts that would offset the sort of regressive nature, so compensating lower income cohorts for the higher prices that they might face. And there's an argument there from economists that and probably people more broadly, would you like a lower income tax rate, and you can decide to do with that money what you would like, whether you would like to spend it and you would attract a higher GST, or invest it or save it, or even pay off your home loan. Maybe there's an argument there for a GST to be increased in terms of the rate, broadened in terms of the base. It would generate enough revenue to compensate lower income cohorts in particular, and probably see the possibility for broader tax cuts across the board. These seem to be like pretty good economic arguments in a period where the mantra is don't waste the crisis. And it would be a shame not to get significant reform coming out of this crisis, because we know that even going into this crisis, the Australian economy needed reform. It needs productivity enhancing reform, and it needs tax reform. And it would be a shame for these things not to occur.
Okay, Alex Joyner, I really appreciate your time, and thank you for making a pretty non-event in terms of the RBA something so interesting. Alex, thank you. Alex Joyner there from IFM Investors. Thank you.
No problem, Ricardo. Anytime.
So there you go. The Reserve Bank left the official cash rate on hold at 0.25% as expected. It really didn't move the markets. The Australian dollar is exactly in the same spot as where it was before the announcement, 69.65 US cents. The Australian share market up by 0.63%. It's gone on a bit of a roller coaster ride during the day. I'll have more details on SBS World News tonight during the On the Money segment with me. I'll see you then.